Hello, listener. Hello, dear my friends. Today, I would like to describe about loan origination process or preparation of a credit proposal. As an investor, you would hire a loan officer. The loan officer, in behalf of investor or a financial institutions or a bank, the loan officer uh, the loan officer will prepare the whole loan origination process or a credit proposal. We know that there are three stages of loan origination process or a preparation of credit proposal. Number one, loan processing. Number two, loan underwriting. And number three, loan closing and disbursement process. So I would like to describe the loan processing system. At first, as a loan officer, you will have to take the necessary documents or loan applications with necessary documents from the clients or borrower. The necessary documents such as loan application form completely filled by the borrower or client. Copy of national ID card, SSN, I mean social security number, driving license, and other government issued cards. The credit application you will have to take in prescribed format duly filled that 2 to 4 copies of photographs from the borrower, photographs of the business or inventory. You will have to prepare an stock report against if the borrower may be a business holder or businessman, up to date CIB report or CIR report, I mean credit information report from the authorized organization. You will have to collect credit report of the borrower or supplier, liability declaration of the borrower along with an undertaking that they have no liabilities in any bank or financial institutions except as declared. Undertaking stating that they will not avail any credit facilities from any other bank or financial institution without prior consent of the bank. Undertaking is stating that customer does not have any relationship as director or sponsors with the bank. Undertaking stating that customer shall not sell or transfer the ownership of the business, factory, shop until all amounts due to the bank or financial institutions are fully paid or without non-encumbrance certificate of the bank. Credit risk grading score sheet. If the loan amount is bigger or higher range of volume. If the loan is personal loan or term loan, a rural credit loan, in that cases, the post-dated check covering the credit facility as a loan officer in behalf of bank we are taking as a security purpose to secure the loan amount. Acceptance by the borrower of the sanction letter. Proper stamping, I mean loan documentation completion in proper way. This is the first stage of the proper whole documentation on processing a loan. Then, as a loan officer, you will have to analyze the whole documentation and verify the documentation is the document is valid or not. If the whole document provided by the borrower is valid by analyzing or analyzes the whole document, then the documentation or loan application procedure will be accepted. If the document will not acceptable by the bank or financial institution, then the loan will be rejected. We have come to the next stage is loan underwriting process. The document we have collected from the borrower or client, the client will take the loan from the bank or financial institutions. The whole document will be analyzed or verified by the loan underwriter. The main function of the underwriter should analyze and verify the whole document of the provided by the borrower. The roles and responsibility of loan underwriter such as verification of all loan information, I mean all personal information such as NID verification or SSN or passport verification, the photographs of the borrower and the guarantor will be duly signed by the loan officer and attested the photographs by the loan officer. The underwriter will have to assess the whole risk in favor of the credit facilities that will be provided to the borrower. The risks means credit risks, market risks, operational risks, and liquidity risks. The underwriters have to analyze the 5 C's. These are capacity. Capacity means the capacity to repay the loan or loan installment with interest in due time. The borrower will able to repay the loan at the right time with interest including principal. That is very important and it will be judged by the underwriter. The management capacity. If the borrower has an organization or a business, the employment of the organization is capable or not, the investor will in favor of investor, the underwriter will analyze the whole capacity to repay the loan including interest with other government charges, and after then the underwriter will analyze the credit history, previous credit history, the borrower or the loan officer, or the client in the first time she or he paid the previous installment or loan amount in due time or on time. It is very important. Historical financial information analyzed by the underwriter. Debt obligation, I mean total debt according to the equities or the capital of the borrower. Liability analysis and asset analysis of the borrower. Then collateral. Collateral means the if the borrower will not pay the loan amount, or at that time the collateral land such as land, building, other fixed assets, equipments, this property will be sold by the investor or financial institutions or a bank. If the borrower may not able to repay the loan amount including principal and interest, in that cases the bank will sell to adjust the collateral against loan. Then the underwriter will have to analyze the character, personal character and business character. Then the underwriter will analyze the capital or owner's equity of the borrower. And then the underwriter will analyze the condition, loan and advance requirements fulfilled by the borrower. Borrower may fulfill the terms and condition against the loan if the borrower is able to maintain the terms and condition against loan. So the underwriter will provide a positive sense against this type of loan. The underwriter will analyze the pay stubs, salary certificate. If the loan is a personal loan, mortgage loan or consumer loan, in that cases pay stub and salary certificate is very important. How much the client or borrower gets the salary from his organization, the organization will provide a salary certificate or pay stubs, and this type of document will be analyzed by the underwriter. Residency verification of the borrower and guarantor, such as national ID card, passport, driving license, and another government document provided to the authorized authority in favor of borrower or client. Then the underwriter will analyze the credit score, I mean FICO score verification process completed by the underwriter. It is very important factor. If the credit score is good or acceptable, then the loan will be provided, otherwise not. property appraisal, judgment by the underwriter, then credit check, credit history check, financial analysis. Financial analysis is very important to provide a limit or credit limit or a loan in favor of borrower or a client. It is very important. This all type of financial statement will judged by the underwriter as because the financial statement will say the present condition, financial condition of the borrower. The borrower is solvent or not. The financial condition or circumstances is well enough or not. If the financial circumstances is well and it is acceptable, then the underwriter will recommend to provide a loan limit or a credit limit in favor of the borrower. At least 6 months to 2 years bank statement of the borrower. Financial ratio analysis is very important also. LTV, loan to value ratio, DSCR, debt service coverage ratio, current ratio, current asset by current liability, leverage ratio and IRR, internal rate of return, also important. This type of ratio analysis is very important to judge the financial condition of the borrower. Income statement of the business holder or the borrower who will take the loan. It is also very important. Then asset verification of the borrower is also very important. Total cash on hand of the borrower, the bank account balance of the borrower, gold or ornaments the borrower possesses in his home, price bond stock and other government securities, fixed deposit receipt, recurring deposit, current deposit, savings deposit and collateral verification is also very important as because if the asset condition is not well enough, the bank, the loan will be very in high risk in the course of time. The party or the borrower in the long run may default or going to be a defaulter. So the asset quality and asset of the borrower is very important to take a loan or provide a loan by the bank or financial institutions. And then the underwriter will assess the risk, credit risk, default risk, market risk, interest rate risk. If the interest is will very high to take a loan, then it is very difficult for a borrower or a loan holder or a client as because if the profitability or the business condition will not in good positions of the borrower, so the borrower may not or will not capable to repay the interest amount in monthly basis or quarterly basis or at the right time. Operational risk will be analyzed by the underwriter and liquidity risk also analyzed by the underwriter. Liquidity risk, that means current ratio, ADR ratio, asset to deposit ratio, current ratio, current asset by current liability, It is also very important to judge the financial condition of the borrower. The underwriting process is very important to provide a loan or a limit sanction in favor of the borrower, as because the loan taken by the borrower from a bank or financial institutions depends on the analysis of the underwriter. If the underwriter recommends that the financial condition or previous loan history of the borrower is acceptable, then the underwriter will recommend it to the bank or to the loan officer to provide the loan or sanction a loan limit. Various type of loan limits such as personal loan, mortgage loan, and business administration loan, rural credit. Various type of loan facilities depends on the underwriter or underwriting process by the underwriter. And then the third step is loan closing process. If a loan is approved by the bank or a loan officer or a financial institution, then the loan officer will uh, provide a sanction letter to the borrower and create a limit into the CRM, and the loan will be approved by the higher authority and duly signed by the higher authority in the sanction letter. The loan officer will take the proper documentation and have to complete the whole documentation procedure with stamping, proper stamping. Loan documentation such as the loan officer will have to take to complete the such documents such as letter of disbursement, letter of arrangement, letter of lien in cases of continuous loan, letter of hypothecation if the CC loan or business loan, personal guarantee, third party guarantee, and the letter of continuity and other necessary documents. Such documents depends on the loan criteria or loan classification of the loan. And then the borrower will sign all the documents. After completion of documentation, the loan officer will create a loan or create a limit on the CRM system and transfer the whole loan amount to the client's savings or CD account. And after providing the loan amount to the borrower, the bank will take a letter of acceptance from the borrower. This is the whole procedure of a loan origination process or make a credit proposal. So I think that you are better understand on this tutorial. In a nutshell, I have described all of the loan steps to make a credit proposal or to provide a loan to the borrower. This is the whole loan whole documentation procedure, loan processing stage and loan underwriting stage. So I think that you are making understand or you are better understand about the tutorial. Nice to meet you. If you are not subscribed my channel, you are requested to subscribe my channel and stay with my channel. In the next tutorial, I will describe the loan assessing credit risks or assessing risks such as credit risks, market risks, operational risks, and liquidity risk. So you are requested to watch my video. Stay with me, stay with my channel. No more today. Thanks a lot. Stay with me. Assalamu alaikum.